Hello everyone, welcome to Just Invest Today. And in today's video, we're going to talk about a stock that I just purchased or I just purchased more of, and one stock I sold off. Because in my mind, I'm honestly switching up my style a little bit. I'm making new adjustments every time I watch videos or read books. And I'm just looking into new strategies all the time to get higher returns, more safety, just think about investing in like a different light. So in this video, we are going to talk about it. But before we do, guys, can you please like this video, subscribe to my channel? I'm always providing you with more content, good content. So subscribe, click it, click it, click it. I was just thinking about Joel Greenblatt and Warren Buffett and how they were making 50% a year and just how they were doing it and what they were thinking about during those times. So from 1985 to like 1994, Joel Greenblatt averaged 50% a year. Like that is just mind blowing. And that's kind of what I strive for, even though I know it's almost impossible. Like it's just such a far-fetched idea. You can get, or I can just think about it. I can just try to get as close as possible to that goal or just even thinking about that goal. Because if I think about averaging 50% a year and I miss that target, maybe I start averaging 25% a year. Who knows? But when I think about it, I'm just thinking about their old strategies. Warren Buffett averaging 50% a year in the 50s, 60s, and when he first started out, and how he thinks about investing during that time. So the first rule is holding a company as long as possible, as long as it's still undervalued. And if it gets severely overvalued, sell it off, especially if there's a better opportunity in the market. And that's what I did today. I sold off my Etsy position and I actually bought more into coin just because I don't have a limited amount of capital. I'm almost fully invested in the market, so I need money to invest in a better opportunity. So I'm seeing a way higher ceiling for coin right now compared to Etsy. Even though I love Etsy, I love what it's doing, I love its moat, and I still think that it's gonna have a high success rate in the future. But coin right now is just severely undervalued to me, and I think it has a higher ceiling right now. So I'm selling out of that because I made strong gains in Etsy, and I'm putting my money into coin because I think coin has a higher ceiling. It's a low risk right now because of what it's doing, where that market is growing into. So that's kind of my new way of thinking. If I see a better opportunity in the market, I'm going to sell off a position even though I love it and put it into a better opportunity. And that's what I'm going to start doing from now on. Those are the two moves I just made. And just a quick thesis before I make a full video on coin. Coin is entering the NFT market, and the NFT market is just exploding right now. And there's such a high ceiling for the NFT market, and coins getting into that, it's just going to be growing at a crazy rate. Even with an expected 15% return, a 15% growth rate out into the future, this company is worth $350 minimum, and it's selling at like $220. So they're getting into the NFT market. The crypto market is going to grow at such a fast pace, you just can't close your eyes to that. And I think the crypto market is going to grow like 40% at least year over year, 20% year over year, whatever you have it at, the crypto market is just going to grow. It's just in the early infancy of people adopting the crypto market. I still feel like coin has such a high growth rate into the future. They're the leading exchange in the US market, the leading platform. There's just no way it can lose right now. So I put more money into coin, and that's what I'm seeing. I'm going to make a better video, a full video on what I'm seeing with Coinbase to kind of see my thesis on why I invested heavy in Coinbase. So that's the number one rule. The second rule, I'm going to stay fully invested as long as possible. And when I'm thinking about that, that's what Joel Greenblatt, that's what Warren Buffett was doing. They were trying to be fully invested in the market because the market is usually going to go up most of the time. You only are not fully invested if you don't see any opportunities. There's no cheap companies. But when you really think about it, there's always going to be a company that's cheap. If you really dig hard enough, if you really look hard enough, there's usually going to be cheap companies in the market. It doesn't matter what type of market you're in, I feel like there's going to be cheap companies. So if you find cheap companies, stay fully invested. If you don't, you can have money on the side. So that's how I'm going to think about it. I'm not going to think about, oh, I used to think that I need like 10%, 20% on the side in case a crazy opportunity comes along. But I feel like I can do that wait for perfect opportunities, and be fully invested. Because if I have a position that went up crazy already, I can sell that off and put money into a position or an opportunity that I feel like it's gonna double or triple or whatever, or there's gonna provide me with more safety. So that's how I'm looking at things. Stay fully invested as long as possible, as much as I can. If I can't because I don't find nothing, yes, have money on the side. But if I don't, then try to be fully invested as much as possible, because being not fully invested hurts your returns like crazy. That's how I'm thinking about the second rule. My third rule: if I have an underperforming stock, say it's down like 10%, 20%, 30%, but I still feel like it's undervalued, hold it for like hold it minimum 2-3 years, even if it's not producing what I'm thinking. And this is almost like a Guy Spear rule. Guy Spear said that if his stock has gone down 50%, 30%, whatever it is, you hold it for 2 to 3 years no matter what. As long as you still think this company is undervalued, hold on, even if it's underperforming. And that's how I'm thinking about these new positions. I have positions that are down 30%, 20%, but I'm still holding on. Know why? Because I still feel like the market hasn't valued them properly. And we have to be able to handle those swings in the market, where the market is not going to agree with us. It's not always going to be on our side. But as long as we have that long-term mindset and we think this company is undervalued, then we can sleep well at night knowing that these companies are going to provide value in the future, and they're going to provide you with good market gains. So that's my third rule going into this new kind of strategy that Buffett and kind of Joel Greenblatt had. So that's it for the video. Tell me what you think of what I'm doing, how I'm thinking about the market. Like this video, subscribe to my channel, and I'll get back to you in the next video. Peace.